Hello and welcome to this webinar hosted by the Family Office. I am Hojeij, business news anchor with Asharq With Bloomberg. I've been working in business news for the last 20 years. I will be your moderator for this webinar. My guest for today is Salem, who is appointed at Asharq With Bloomberg as financial analyst since 2020. Before we start digging into our conversation, I will introduce our host, the Family Office. It is an independent wealth management firm that specializes in providing customized portfolio solutions across a diverse range of alternative investments. The Family Office's mission is to provide its clients with the tools and expertise needed to build, preserve, and grow their wealth over time, ensuring that their financial goals are met with the highest standards of professionalism and care. Of course, the purpose of this webinar is to provide a straightforward educational session on the basics of financial planning and investing as an essential tool for achieving your long-term security and peace of mind. Now, let us begin. Hello, Mary.
Hi, Maya, and thank you for the intro. And it's a great pleasure being with you on this today. Usually when we talk about financial planning, the first thing that comes to anyone's mind, even by definition, is the purpose behind enhancing the well-being of a human being in the first place, and then trying to work around the financials of their daily lives, long-term strategy to ensure the flow of finances into the life of the individual, or further in addition to those, at a later stage, it could be institutions, companies, or any other sort. But in the first place, it comes as a purpose to maintain a certain level of well-being, financial status, or to ensure, like you just mentioned a while ago, something for the future that will help the person maintain the level they're currently in, or ensure they have a brighter future for themselves, their kids, or the family.
So when we talk about it, if we want to dig a bit deeper and speak about the benefits of financial planning, what does it mean for me to start financial planning?
In the first place, when you want to start financial planning, you have a purpose, you have a goal that you would like to achieve. And this goal usually defines the strategy or the way or a timeline for that financial plan that you're going through. Some people usually have short-term financial plans, others have medium-term, long-term. So this whole time frame defines the type of planning that an individual is going to go through, defines the type of investments that this person is going to follow in the plan that they've drew for themselves for the future, or for whatever timeline they have. So it's a very broad topic. It's a very broad strategy that we could follow. But at the end, the main purpose behind financial planning is achieving a certain financial goal that an individual is having, be it retirement, be it educational purposes, family support, any of those is a definition or a purpose behind the financial planning that we're discussing today.
When we discuss financial planning, of course, it's not limited to one gender specifically, but Marie, how do women approach financial planning? Do they have the same approach towards it like men when it comes to thinking for the future?
Maya, usually when we talk about women and men, it's always taken into consideration or taken into perspective that women are super emotional when it comes to decision making, be it financial decision making or any sort of decision. Is that a good or a bad thing? That comes up. Some people take it as a negative thing, but when we look at it, it's something very positive. Women take into consideration the scenario or the goal, the purpose behind such investments that they make. So they tend to be less of risk takers, but sometimes they are more of benefiters behind the investment that they're taking, because they rely in the first place on the purpose, not on the goal of just making profits and winning. So they tend to be medium to long-term investors, unlike men who are usually speculators, day traders, or any sort of risk takers, if we want to talk about that specific aspect. So women do have emotions, but they play in the benefit of their investments, and this has been proven over studies that female tend to have better decisions when it comes to financial markets or financial planning.
Let's move the conversation towards the investing angle. You spoke of Marina. When we're talking about financial planning, and we say that when women move in that direction, maybe they are more into savings. When you said long-term investment, what did you mean? When we define investment for anybody, and will they be willing to take that move?
It starts from historically when the women were actually, they used to get their finances or income from inheritance, or be it savings, or pocket money from family members, or any of that. Now women actually are working at the working stage, and they actually generate income. They can actually decide on what to do with these money that they have, how they would like to invest their money, how do they like to grow it. But the main purpose all usually comes for women to preserve financial status, and to ensure that they have savings for the future, to support their families in the first place, and their kids if they're mothers, or whatever, to maintain a well-being. Let's put it in that sense, and that at this stage.
Okay, Marie, you did mention a few verticals when it comes to that type of investment, but also you did mention, I mean, if we can focus maybe on one for a couple of minutes, you mentioned inheritance. So that inheritance is inherited and sits in the bank for years and years, and they do nothing with it sometimes. So now this culture is changing, and they are becoming more aware and more educated about this. In that sense, when we look at the risk versus return, how would that signify here?
Maya, this is the main thing that differentiates women from men, or even investors along the path. The risk that the investor is willing to take defines how much he is willing actually to give out of that initial investment that they have. It doesn't mean that they're going to lose that money. Sometimes higher risk means higher level of income or higher level of return, but it's a risk end of day. So it's the same way. If it's a positive return, it's going to be very high. If it's a negative return, it's going to be drastic and dramatic, and it's going to cause losses. And this is where actually the purpose of the financial planning does not fit the criteria that the investor is actually looking for. This is why when we focus on risk and the return, it's very critical to actually explain to investors what's the difference between the risk tolerance levels that the investor is planning to take. Some investors come to you and tell you, I'm not willing to lose any of the capital that I have. Okay, there you know that this investor is very conservative.
Low risk.
He's he doesn't want to take any risk. He wants to more or less increase the savings they have, but it's going to be in a very low percentage. And this is where it's very important for an investor to discuss such details with their relationship managers, because it will clarify the path or the investment strategy that should be taken for this purpose of investment. And it clarifies how much that investor is willing to actually risk that investment that they're initially inputting into the plan that they want. And it avoids the company and the financial institution and the relation manager any future conflicts that could arise because of any losses that the investor might incur because of such decisions that he has chosen in the first place to take based on the risk tolerance decided.
Okay, having said that, in our years of covering the markets, Marie, we always speak continuously about the portfolio and what a perfect portfolio looks like, the 60-40, but then there are other alternatives. Let's talk about the importance of diversification and what types of different asset classes could we look at?
Well, when it comes to investments, there's no ending to the scenarios or strategies that you might have in order to ensure you have a proper investment. Diversification is something very important. And I always try to highlight the importance of such strategies Because end of the day, and when we're talking about diversification, we're not talking just about diversification in sense of the type of securities, whether it's securities that you're trading in. It's about the whole structure, be it sector, be it asset class, be it anything. Because end of the day, when you want to increase the chances of your profits, you will need to have different products in your portfolio. Some consider that with the current interest rates being high or anything, that maintaining cash investment is feasible. Some others maintain higher risk investments in real estate, let's say. Others would actually invest in financial markets, other in debt markets. So we have different strategies, and someone who wants to maximize on their investment would actually diversify in all asset classes. All asset classes, we're not going to talk about junk investments, but the profitable ones, the ones that would actually give a good return, decent return to the investor, given the portfolio that they have. And in this case, it's more of a scenario of hedging. Hedging meaning if something drops, the other goes up. So you're more or less maintaining a balance in the portfolio. And this is the importance of diversification, which everyone actually who wants to preserve the investments they have follow such strategies. They do not just invest everything in one single basket.
In that direction also, explain to me, why would it be relevant to invest in private markets?
Private markets are usually easier for investors who are not so into financial markets. Let's put it that way. So these, when you go into private markets, you actually refer or go back to a financial institution, a relationship manager who would advise you and give you the proper scenario or strategy for your investments to ensure you have the right investment in place. It's usually customizable. It's usually easier to maintain, and it's unique. It's not something that everyone would go into. And especially if we want to come and discuss the investments that are available worldwide. Financial markets is a very small portion of this whole system that actually offers investments to investors. So there are a lot of opportunities out there. Yep.
Let me share with you an interesting piece of information. Out of 333 million companies worldwide, only 0.01% are public. This is a statistic shared by the family office that I thought I would share with you, Mary. Mary, how does this discussion relate also to compounding?
Now, when we talk about compounding, it's something related to joining efforts from different strategies to ensure that you are actually building on the returns that you have. You do not want to actually just maintain a fixed return over time. You want to grow it. You don't just want to, it's not like investing in a certain company and just taking dividends end of the day. You want to have the capital increase, capital gain, you want to have the dividends, you want to have the reinvestment gain of such investments. All of these, they come in a strategy that actually helps the investor see the return, grow on those returns, and not just maintain a stable return that's related, for instance, to the salary that you obtain end of month or any of that. You want something that is always promising, something that would help you build huge plans or bigger plans for the future based on the strategy that you're following in the investment. And this is something that investors nowadays are actually focusing more on, because it's a new strategy, or it's something that people are getting to know more about, and it would help them take better decisions, and it would help even financial institutions have wider scope when it comes to such investments offered to their clients, and it would give them a wider scope in terms of the diversification that we discussed earlier, because it's never ending. There's always opportunity somewhere for them to actually benefit from.
Now, we're talking about the benefits of investing. Why is it important to start investing? When should you start investing? And is there a percentage of your income that should go into investment, or not only your income, maybe even your savings, Marie? When we look at investment in that direction, when should I start? Is it too late or not? And how important is it to start early?
Maya, it's never too late. Okay, and
I'm glad you said that. Okay.
when it comes to investments, it's about the personal needs that anyone could have. And we discussed this in the first place. What's the purpose behind the investment that you're doing? If you're doing it just for the sake of having fun and learning more about the financial markets, then you're definitely not going to go risk all your funds or all your savings into that such investments if you're at the learning stage. However, if you have specific requirements that you need to achieve and need to meet in a specific timeline, you need to review the strategies that you want to take. Now, with regards to when or how much, this all depends on the individual or on the individual investor, because your requirements differ than mine. My requirements differ than any other investor. So it is customizable, and we need to ensure that they're customizable. I cannot come and invest in the same portfolio that you're investing in when I have different goals. And this is what we need to focus on. Never follow other people's investments. Their requirements are not what you want. And this is a mistake that most investors, specifically in financial markets, tend to make. They look at what big funds are investing in, what major shareholders are investing in, and they tend to follow the steps of those investors. They tend to lose. You lose your money. You cannot tolerate that risk that was taken. They can. So this is why we always insist on specifying one's goal, specifying on the timeline, and then you take the decision of the strategy that you want to follow based on those requirements that you want.
So when we set those financial goals that you mentioned, how does that help build confidence in the idea of investment? How does that help in moving forward with it?
Well, everyone has investments. Let's put it that way. When you put your funds in a bank account, in a savings account, you're actually investing. You're getting a small return on those investments from the interest that you receive on your funds. When you go into insurance plans, you are actually investing. When you put even your money at home in a safe, you are actually investing. You are maintaining a certain amount in a place where actually you would want to save for the future. Now, the strategy of how much you want to increase on that investment and how much return you want, that's what makes a difference of the strategy and the purpose that you are investing for. So let's put it that way. It started a very long time ago from a different perspective usually, and it grows and changes over time based on the progress and the innovations that we're seeing in the financial sector as a whole, and in the financial market and investment strategies that we're reviewing on a daily basis and seeing things enhancing. A couple of years, 10 years ago, we did not have cryptocurrencies. Now you have cryptocurrencies as an asset class. So every time as we move on, things are growing, strategies are differing, and investments are changing. So this is what we need to focus on. What is the purpose and how we are going to maintain it? And it's not something new that we're facing. It's something that we're growing, something that we're expanding on.
So this brings me to the next question, Marie. And throughout my career in the industry of business news, I've heard it so many times. Investing is too risky. I don't have enough money. Investing is too complicated for me. I cannot do it for myself. I'm too scared to lose all my money if I invest. How do we address this?
Listen, everything is risky, Maya. You put your money in a bank account and then you discover that the bank is going bankrupt. Isn't this risky? Haven't you lost your investments, your savings?
Everything in Lebanon.
I did not want to address that specifically, but there are other cases and other scenarios. And you can see it even in economies of countries. they face specific cases where actually they go into debt, they cannot meet the obligations they have. These are all risky investments and risky financial decisions that actually countries could take, not just individuals. So anything that we take is usually, any decision that we take in our lives, it's risky, be it financials, be it on a family level. There's a risk. There's a risk factor in everything that we do. So accepting the fact that there's a risk would help you take the decision faster. Because there's nothing which is always there. Today you have a job, tomorrow you might not have a job. The risk factor is not absent in any aspect of our lives, and as well in the financial aspect. Decisions that we make are always risky, and we should be taking responsibility over our decisions. If we are not able to take such decisions and do not want to take the responsibility, then we go to experts in that field. We go to people who know better than we do. We give them what our requirements are, and they will be able to do the job for you happily, with confidence, and provide the results that you are looking for. Financial institutes, they tend to work in a way as close as possible with the investor to meet their requirements. And this is based on the integrity that these companies actually have and the loyalty they have to their clients. In the first place, usually such financial institutions like the family office, the purpose that they were established for in the first place was to serve customers, was to make it easier for customers. Now, definitely there's a return to them, but in the first place, the main purpose is to help investors meet their goals. Okay, let's put it that way. Nothing is for free, and there's always charges related to those. But end of the day, if the customer is happy and is receiving the product or the results that they're looking for from such investments, this is where the company or the financial institution makes their profits, the reputation in the first place. And with time, strategies they follow are implemented everywhere, and people build confidence in such companies, and they feel reliable towards them, unlike let's say insurance companies who do not actually provide clarity on the investment that you're giving. And usually most people historically, when someone or a salesperson from an insurance company would come to you, because they talk a lot usually, and they discuss terms that investors do not understand, they just go like, okay, I'll do the investment without understanding the strategies. Whereas financial institutions and private bankers, they tend to work in the first place for the purpose of the investor. They listen to what they have, and they do not offer what they have before listening to what the requirements are. And this is where the difference is. This is where it's more comfortable to deal with people on a personal level than to deal with the financial institution as a package, as a whole, and go for products that are already structured, made, and already are in place, and do not actually fulfill the requirements that investors are looking for.
So when we speak of that, we talk also about the return on investment. It depends on the risk in the asset class that you've chosen, or you're going to rely on your agent, and they will make those decisions for you.
The relationship manager or the private banker that you're actually dealing with usually follows what your requirements are. So I would rely personally on the relationship manager as long as he understands what my requirements are. I cannot take the decision. So usually it goes into a fund or into a strategic investment vehicle that this company establishes for specific investors based on definitely the net worth and how the risk appetite for that investor is. And accordingly, they make decisions on how to deal with the investment in the first place, trying as much as possible to meet the requirements. There's nothing such as we met the investors' requirements 100%. There's always a margin of I would not say error, but difference between what is there and what is actually required. But usually it's very minimal when the private bankers or the institution understands the requirements very clearly and try to follow a strategy that would actually help investor reach those goals within a timeline that has been decided upon earlier within the agreement or the terms that the investment plan has been placed.
There's always a minimum amount for investment. Having said that, even with this minimum amount, I would like to maybe define or put into steps, maybe the process, maybe starting small, seeking advice, educating yourself. How do you do that with your relationship manager?
Now, usually, Maya, with the minimum investment, it's specified by each company
Okay.
on a case by case basis. So I wouldn't say there's a minimum. To me, any amount that any investor is willing to start with is an investment, regardless, be it a very minimal amount, a very huge amount. End of the day, each person has a unique strategy or in a unique case. I cannot compare investors to one another. But on how to serve these investors, this is what makes the difference. I cannot come and give importance to an investor as a banker, as an ex-banker personally. I would never actually deal with a client based on the net worth that they have or on the amount that they've invested. Each and every client is supposed to get the rights that they deserve, the service that they deserve. And a beginner is someone who is going to require more support, someone who is required to get more education on the types of investments. And a good private banker, someone who would actually care more about the investor, would actually explain the steps of the investment on a case by case basis, on an investment decision, one by one, in order to ensure that they're having the right decisions in place, and they're actually serving the customer in the best possible way that they can. Yeah. So it's quite specialized or unique with every investor, and this is how it should be. Do not deal with everyone as if they're in the same class, in the same society, for the same purposes or any of those. Just take it on a case by case basis.
And in that direction, also, when you are dealing with specific firms, Marie, do they, because they are in the market and they are there, they know what's going on, so maybe that makes it easier for them to guide you in what suits you. So say you want to invest in the region, so you go with a firm that is in the region. You want to invest outside the region because your investments in the region maybe could be more in the equity markets or in specific asset classes. Is this something relevant that you consider when you are approaching a firm?
I would approach a firm that I feel comfortable dealing with the employees they have. I
Okay,
would
nice.
approach a firm that their strategy is clear. I can go with a local firm that actually has could give me access to worldwide investments. Okay, I wouldn't personally having so many different accounts, so many investments in different places is going to cause a chaos end of the day. You will not be able to actually follow on all of those investments unless you don't have anything to do all day long and just sit in front of your screens and follow the investments that you have. However, when you actually focus and look for a financial institution that is able to give you a worldwide access to different asset classes and understand your purpose and goals. No, it doesn't have to be so many different institutions. One institution with such criteria would be more than enough and would be easier for you to actually manage and follow up on with the relationship manager that you have or the financial institution.
That also brings me to ask you a question about the communication, the importance of the communication and accessibility. When we speak 20 years ago, investment 20 years ago, you had to call, you had to manage the timing, different zone, different time zone. And today, with everything that technology has provided, how much easier has it made it for those people who want to go into the market, who want to invest, given the technology, given fintech, given all these platforms that are making this easier for us?
Maya, this is very important because 20 years ago, if we go back to that date, and you probably remember it as well as I do, when we went through the financial crisis in 2008, a lot of people lost a lot of money due to the lack of communication, due to the lack of clarity, due to the lack of transparency between relationship managers and investors. And the main thing was there, and the cause for this whole crisis that went like a snowball and dragged everyone into disasters was the lack of, it was the denial that actually, in the first place, private bankers were going through, and the
Mhm.
investors refused to believe. When you go into a case of denial and refuse to see the losses that are being made, and insist on investing in remain in the investment without booking the losses at a specific point when you know it's going down the hill,
Mhm.
this is something that is mainly caused by the ego that an investor has. And the fact that they would refuse booking a loss would actually cause them to lose even more. And this is what's happened during the financial crisis. And we've seen how it dragged across all sectors and all aspects. You remember the real estate crisis that went around in the GCC, and how all properties just went down. We've seen real estate companies were losing in the financial markets and in their on their financial statements. This was all caused by ignorance, lack of
Mhm.
communication, and lack of education. And people learned from it. People learned very well out of that crisis that we've been through, and we've seen
Okay.
them. We've seen how they've overcome the COVID in 2020.
Mm.
We've seen how they're even going, they're overcoming the geopolitical tensions that's going around in the region at the
True.
moment. And we've seen how all financial markets and asset classes in general are being resilient to such changes that we're seeing. This is where actually the in-depth education that people learned, and the lesson, the very difficult lesson that was given by the crisis in
Mhm.
2008, taught investors to actually be realistic, accept the loss, do not regret
Mhm.
actually exiting a certain investment after booking certain profits just because you've seen that investment go higher later on. Do not dwell on the past.
Okay.
Just look for what opportunities the future is hiding.
So in that direction, the communication and the seamless, I have to have this line about the family office, that they are investing and they have invested a lot in technology in their app and in making it more accessible to everyone. Marie, if we want to wrap up our whole conversation about investment and the reasons why everybody should invest and how to move forward with investment, and also, I mean, I hope the family office will allow us to target women with this conversation, with this message. Why is it important also for women to begin? So let's wrap it up and summarize our discussion in 3 to 4 points, in addition to saying why women should get out there and get on board and start investing.
Maya, you're a woman, I'm a woman. We're actually running this webinar, and we're
Okay.
doing this discussion based on experience that we've built over the years, be it in physical financial markets and physical
Mhm.
investment schemes that we followed, or be it even in covering the financial news. Women, it's not about the need or the urgency that they need to invest. They're actually doing it. When
Mhm.
a mother invests in her kids, she's investing in something, and she's waiting for a return in a place, be it how they grow, how
Their own
they
success,
structure
yes.
their personalities and everything. Everything is an investment. So the investment in the financial aspect is not any different. And if she's capable of doing all of that investment, be it family, emotional, even career wise, she's
Mhm.
capable of doing the investment decisions properly. And if she is not able to do it for now on her own, she is able to understand it and learn it in a very quick way. And this is something that we actually need. It is very essential and very critical
Mhm.
in our societies. Women are moving very fast. I still work from home at the moment, and I'm still doing all the job that I used to do earlier before working from home. So there's no limitation to where things could stop for a woman.
Mhm.
She's capable of multitasking their emotions and the purpose of the investments, which is always related to the
Mhm.
emotions. And I insist now, and I will repeat it, which is very beneficial for women,
Okay.
helps them study the investment that they're taking and make sure they take their time in the decision before they take it and build on that to ensure it turns out very successful.
So, Marie, I'm going to wrap up in a couple of words. Definitely advise to start financial planning. Definitely start investing. Whatever it is, just go ahead and start. Seek advice. Go to the experts, talk to them, see what they advise you of to take it further, to take it to move forward. If you go to a firm like the family office, make sure that you have a good relation with them and with your relationship manager. Educate yourself. Always educate yourself. It's very easy now. There is a freedom of information.
You should have a very clear view of what you want in the first place. Don't let people guide you and mislead you with what you might want. You should know exactly what it is that you want, and then have people implement your requirements.
Thank you so much, Marie Salem, financial analyst. It was a pleasure having you, and thank you for the family office, our host, for having us during this webinar. And thank you from me, Maya Hojeij, business anchor at Asharq with Bloomberg. I hope to see you again in further discussions.